Let's do Pom Pom. Now guys, you must never make the mistake to put accounting in little boxes. Accounting does not belong in a box. So therefore, if we do study unit 6, which is mainly about creditors, nothing prevents me from including the cash and cash equivalents, debtors, anything. Inventory, we're going to do inventory after creditors. Inventory and creditors go hand in hand. So never ever think about accounting in boxes. Don't try to put up fences. There are no fences. Accounting is an integrated subject. That something that happens in one thing has a ripple effect into something else. So in this question, part A, that's all about debtors. And then the B part of the question, that is then a creditors reconciliation. So I can very easily, and I will do that. In a test or exam, you're only going to receive, definitely in the exam, integrated questions. Now, you are the accountant of Pom Pom. It's your responsibility to ensure that trade debtors and creditors are reconciled on a monthly basis. Now, in the first part of the question, they tell you, prepare the journal entries relating to the allowance for credit losses account. Only those journal entries that have an impact on the allowance for credit losses account for the period up to 28 February. Then I also want you to do the following accounts in the general ledger, so T accounts, credit losses and trade debtors. So draw the T accounts in the meantime, and then we're going to start filling those accounts in as we go along. And then the last part is prepare the debtors reconciliation between the general ledger and the debtors ledger for February 2014. So that is the reconciliation, the debtors control account with the debtors list balance as at the end of February. Journal operations are not required, and then very important, ignore that. So ignore that in this question. Now you won't be that lucky in a test or exam. I will always ask that because it makes your life more interesting. Good. They tell you the following information relating to trade debtors is provided to you. Trade debtors balance as at 31 January 2014, 89,040, and clearly that must be my opening balance in my debtors control account. So you will open up a debtors control account, opening balance 89,040. Then total credit sales for February 58,320. Now remember, ignore that. So that means that the credit sales amount is also the same amount of the invoice that will be posted to our debtors control account. So on the debit side, sales 58,320. Remember, it can only be credit sales. If I did ask you to show the VAT, then this sales amount would have been 58,320 times 1.15, or whatever the VAT rate was. Returns from debtors during February, 5,400. So that must be a credit against the account. Sales returns, 5,400 Rand. Again, if there was VAT involved, I would have had to add the VAT if I'm going to post the sales returns amount to my debtors account. Then total receipts from debtors. Now remember, that doesn't matter whether it's VAT is applicable or not. That is the actual amount received in our bank, 87,835, and that would be a credit against our debtors control account, bank 87,835. Allowance for credit losses. Now they don't want that ledger account, but they want all journal entries that has an impact on the allowance for credit losses. So at the end of January, our allowance for credit losses had a balance of 4,080. Now, the first correct maybe adjustment entry that I have to pass is this one. They say irrecoverable debts of 4,080 were written off during February. Now, guys, it is very clear that this 4,080 is the same as that 4,080. When do we create an allowance for credit losses? Well, when it is on specific debtors, so it's not a general percentage that we apply on an annual basis. If we go through our debtors list and we identify certain debtors of which we have the opinion that they will not be able to settle the full outstanding debt or a portion of the outstanding debt, that is when we will create an allowance for credit losses. So that means I have identified a specific debtor with an outstanding balance of 4080. I had the opinion that he's not going to pay his outstanding debt, and now in number 2, that opinion was actually confirmed. And now there is concrete evidence that this guy is not going to settle his outstanding account. What was the entry that we've passed in the books when we actually created the allowance for credit losses? We debited an expense account, 4080, if we're going to ignore that, and we did credit allowance for credit losses account of 4080. So you can see that we have already recognized the expense in our books when we created the allowance. Therefore, when we are going to write off that debt now, we cannot create another expense because then we would have duplicated the expense. So in number 2, all we're going to do is we're going to debit this 4080. So we're going to take it out of the allowance for settlement discount, and we are going to credit our debtors account to write off the outstanding debt. So in our debtors account on the credit side, allowance for credit losses 4080, they want us to write the journal entry that has an impact on our allowance account. So allowance for credit losses, statement of financial position 4080, debtors credit 4080. Can you see nowhere here is my statement of profit or loss? And do you know why? Yes, because when I created this account initially, I debited an expense account. So I cannot duplicate that and do so again. Number 3, on 28 February, Lux Bucks Traders, the debtor was declared insolvent. Now, if you are declared insolvent, then there is concrete evidence that you are not going to settle maybe your full debt or maybe a portion of your debt. They continue to say reliable estimates from the company's lawyers indicate that the creditors will recover 16 cents of every outstanding rand. The total outstanding balance on this account amounts to 6720. Now guys, we haven't received that 16 cents as yet, but we will recover 16 cents in the rand. So when we're going to write off the debt here, we are only going to write off that portion that is not going to be recovered. So 84 cents in the rand, 100 less 16 equals 84. So 6724 times 84 cents give us an amount of 5645. So the amount that we're going to recover is 6720 times 16 cents. So we think that we will recover. We don't think so. There's very reliable estimates that we will recover 1075. So when we're going to write off, we're not going to go through the allowance account. The allowance account is now 0. This is an actual credit loss that we're going to write off. So we're going to debit our credit losses account with the amount 84 cents in the rand, 5645, and we're going to credit our debtors account with credit losses written off 5645. Eventually, what was the outstanding balance? 6720, something like that. Eventually, when we're going to recover that 16 cents in the rand, we will debit bank and credit the debtors account, and then, only then, that debtor will be out of our books. Including in the closing debtors balance is an amount of 3720 that is due from Federal Enterprises. Management is of the opinion that this will not be recovered in the future. Is there clear, concrete evidence that the company is not going to recover the 3720? No, there isn't. Management has the opinion. They think they're not going to get that. So if they only have an opinion, I'm not going to write off the outstanding debtor. I'm just going to create an allowance for credit losses for that amount. So again, we ignore that. So what are we going to do? We are going to debit an expense account, credit losses, statement of profit or loss, 3720. And there it is, our expense account 3720. And then we're going to create an allowance for credit losses, statement of financial position, 3720. 220. Remember, this allowance account is a negative asset. What am I going to do in my financial statements eventually? I'm going to deduct the allowance for credit losses from my gross debtors control balance, and that will be the amount I'm going to show as outstanding debtors on the face of my statement of financial position. Good. Then the debtors ledger reflected a closing balance of 46,020. What does that mean? It means when I actually extract a list of all my debtors out of the debtors ledger with their balances and I add all those balances together, it gives us 46,020. Now, in the last part of the question, you have to do the reconciliation between the debtors ledger and the general ledger. So I'm going to start off this debtors list balance with the amount that they gave us, balance per debtors ledger, 46,020. Then there were certain differences that were identified, and that had an impact on the balances. A credit sales to Fergie traders for 3540 was incorrectly debited to the account of Fergie. One is Fergie and one is Fergie traders in the debtors ledger. Now, that has an impact on the individual debtors accounts, and I will have to pass an entry between the individual debtors accounts. But what is going to happen? I'm going to debit the one guy and I'm going to credit the other guy. So what is going to be the impact on the 46,020? There will be no impact. So there's no impact on that balance of 46,020 when we're going to adjust those two balances. We have to do that, but it's not going to alter the 46,020. A credit sale to Festa for 8,400 was incorrectly recorded in the debtors ledger, but correctly reflected in the general ledger. So what does that mean in plain simple English? It means my debtors control account was right. There was no problem there, but it was incorrectly in the individual debtors account. Although Festa Limited was able to take advantage of a 10% trade discount, this sale was recorded at its gross amount in the debtors account. So the debtors control account was fine, but in his individual account, we have reflected 100% of the normal invoice value, and we did not make provision for this 10% trade discount. Now, 8,400 Rand was the credit sale that we've made to this guy, Festa. So what are we going to do? 10% of 8,400 Rand is 840 Rand. So in Festa's account, we're going to credit his account with 840 Rand. So we're going to reduce the balance on his account with 10% of 8,400, which equals 840 Rand. No entry will be passed in the debtors control account because the debtors control account was right, was correct. Then C, the balance of B&W General Dealers was overstated by 780 Rand in the debtors ledger, but it was correctly reflected in the general ledger. So again, my debtors control account was right, but there is an impact now on this 46,020, the amount that we started off with, that one there, because in his individual account, his account was overstated by 780 Rand. So obviously, we have to reduce the 46,020 and his own account balance then with the 780 Rand. So if we're going to add up all these, the original balance as per the debtors ledger, with all the adjustments that we have to pass, we say that the debtors control account should have had a balance of 44,400 Rand. If we go back to the debtors control account and we actually balances off this account, we will see that we end up with a closing balance of 44,400, and that reconciles back to the debtors list balance now. So I'm happy the two accounts reconciles with each other. The B part of the question is creditors reconciliation. They tell you that a statement received from a creditor Fraser reflected a total outstanding amount on 28 February 2014 of 36,600. So the statement balance as at the end of the month was 36,600. The balance due to Fraser according to the creditor's ledger is 18,771. So according to the creditor's ledger, this balance is 18,771. There you go. It looks better like this. Good. So then they've done a comparison between the two balances and they found certain reconciling differences, and you have to do the creditor's reconciliation. So let's start with the creditor's account of Fraser Limited, and it has an opening balance of 18,771. Fraser creditors account opening balance 18,771. Now we have to do reconciliation. Now our reconciliation can either start with the final balance as per the creditor's ledger account, or it can start with a balance as per the supplier statement. I don't care with which one of the two you start, as long as you understand what you're doing. So if it starts with a supplier statement balance, you could have now already put into your reconciliation the balance of the creditor statement of 36,600, the one that I gave you there. Let's look at the reconciling differences. Invoice 90 for 1176 was recorded as 1167 in the creditor's ledger. Now guys, with any reconciliation that you're going to do, your first question is, who made the mistake? And if your answer is, we made the mistake, then it means that we have to rectify our own records with that mistake. So what did we do? We have posted in that creditor's account an amount of 1167 instead of 1176. So there was 9 Rand that we have credited his account to Littlewith. So we have to rectify his account, and therefore we're going to post into his account an amount of 9 Rand, and the counter leg will go against inventory. Now remember, if you have decided that we're going to work with inventory, because they don't tell you in this question whether it's a perpetual or periodic system, and clearly I have now decided it's a perpetual system, then you must do so right through the question. So any other adjustments that has an impact on inventory will not go against purchases, but it will go against inventory then. And vice versa. If you have chosen purchases, then everything further must have then been purchases. You cannot have purchases and inventory in the same question. The creditor statement included invoice 97 for 3420. So it is the creditor statement that had this invoice for 3420. This amount is net of 5% discount. However, the invoice was incorrectly recorded at the gross amount in the creditor's ledger. So again, who made the mistake? We made the mistake. We have not recognized the trade discount that we have received when we posted that entry into the creditor's ledger. So we have then in fact overstated the creditor's balance in the ledger as a result of that. So if we have overstated it, we have credited his account with that invoice value, which was not correct. Now the invoice actual value is 3420, and that was after, net off, after the 5% trade discount has already been deducted. So my first step is to work out what is now the amount before the 5% settlement discount was deducted, and then I can work out what the 5% was that I have to rectify his account with. So 3420 equals 95% of the normal selling price. So 3420 divided by 95% gives me a normal selling price of 3,600 Rand. Now 3,600 Rand times 5% will be the trade discount that they were entitled on. So the amount I'm going to reduce his balance with, so i.e. I have to debit his account, is 180 Rand, and the counter leg I'm going to post against my inventory account, 180 Rand. So we made a mistake, we have to rectify the mistake. Number 3. The creditor statement. Now again, the creditor statement included invoice 1010 for 3120. relating to goods delivered on 27 February 2014. However, these goods arrived at Pom Pom Limited's premises on 2 March 2014, and that was accounted for on that date. Now, if I have a business and I bought goods from a supplier and I haven't received those goods at month end yet, am I going to recognize the obligation in my books for this amount of goods that I haven't received as yet? Obviously not. I'm not stupid. So what am I going to do? I'm not going to record that transaction until such a date that I actually receive these goods. So it was 100% correct that I only accounted for those goods on the 2nd of March. However, meantime, back at the ranch, the creditor has already recognized that invoice on his statement. So the first thing that you should know is that I'm not going to adjust my records for that amount because I haven't received the goods as yet. So therefore, that has to go back to my creditor's reconciliation. Now, if I've started off with my balance as per the supplier's statement, what did it do to the statement balance that they've posted an invoice for 3120? It obviously increased the statement balance. So if I want to make the statement balance the same as the ledger balance, I have to take it out of the statement balance. So I'm going to take it out minus, so I'm going to reduce the 36,600 with the 3120. If you started off your reconciliation with a balance as per the creditor's account, now I don't know what the balance is as yet, but then I argue, well, if I want to make my ledger balance on paper, not in actual fact, I'm not going to fiddle around with my T account. If I want to make my ledger balance on paper the same as my statement balance, what should I have done with my ledger balance? I would have increased my ledger balance with a 3120. Not actually going to post it, but I have to increase it. I have to add it to that balance so that I can show the same balance as the creditor's statement. Number 4, payment of 7080 to Razor Limited was incorrectly debited to the account of Fraser Limited in the creditor's ledger. So what happened is I reduced Fraser Limited's creditor's account in my books with 7080 instead of debiting Razor Limited another creditor's account. So I have to make that adjustment in my books. I've debited this account, so how am I going to reinstate it? I'm going to credit this account with 7080 and I'm going to debit Razor, that creditor, with the 7080. I made a mistake, I have to rectify my mistake. Then number 5, a payment of 7,800 to Fraser Limited on 28 February only appeared in their bank account on 1 March. So what happened is I posted that payment in my books because I passed payment on the 28th of February. Nothing wrong with that. But obviously it does not appear on the bank statement. So I'm not going to adjust my account is right. Now if I've started with a balance as per the statement, what will that payment do to the statement balance when it goes through? It will reduce the statement balance. So I have to deduct the 7,800 payment from the statement balance to show the same as what I've done in my ledger. If I've started off with my ledger account balance, what did that 7,800 do? What did it do to my ledger account balance? It reduced it. So if I want to make my ledger account balance the same as the statement balance, I have to add it back. So I will add it back to the 25,000 in order to derive at my statement balance. Now that is all the differences that we have identified. So now we can actually balance off our creditors account in the creditors ledger and we will get a balance, final balance of 25,780 Rand. 25,780 Rand. If we go to the reconciliation and we're going to do this calculation, remember here we started at the statement balance, then we will see that we want to see a balance of 25,680 Rand in the ledger account. So if we take that balance and we compare that to the ledger account, we see that those two are actually balancing now. So this account reconciles, so I'm a happy chappy. If I started off with a statement balance, I would have worked back to the ledger balance. If I've started off with a ledger balance and I'm going to do that calculation, then I'm going to end up with the amount I want to see on my creditor statement. So the answer of that sum is also 36,600, and that reconciles back with the statement balance as at the end of the month. So I'm also happy chappy that reconciles. So can you see it doesn't really matter whether I do my reconciliation from the ledger account balance or whether I do my reconciliation from the statement balance. I must just argue the right way around in order to derive at the correct amount. So here I start with the statement balance, I end with the ledger balance. It must balance back to my ledger account. In this one, I start with my ledger balance, which I've worked out the final balance as in my account. And once I do my calculation, I must end up with a statement balance as they gave it to me.